Good afternoon, traders. It's July 2nd. My name is Daniel, and this is the view from my vantage point. It's coming up on 4th of July weekend. Hopefully, everybody has some fun plans for hanging with friends and family here in the United States. We're celebrating Independence Day. But over in Greece, not so celebratory. I know over the last several weeks, probably people have been talking about this. Over the last week especially, the news from Greece has caused a lot of people to be scared about their own trades here in the U.S. If that doesn't identify for you how global the markets are, I don't know what will. Your trading in global markets, what happens in other parts of the world, impact and drive what you're trading. It could be stocks. It could be a lot of different things, futures, Forex. We're going to talk about all of them today. But you can see, just from the news you've been reading and the feelings you've been having in the last week and the 350-point drop in the markets on Monday with the Dow, you can see how the global market relationships really drive what it is you're trading. And the people that take those global market relationships into consideration before they make a trade have all of the necessary information to make the right decision. Well, VantagePoint is patented technology and has a patent on using those global market relationships to generate a forecast. So you don't have to go through these situations like with Greece and with other countries. It was Cyprus a year and a half ago, and be scared about the trades that you have on and be on the wrong side of the market losing money or giving back profits if you can get better information that takes those situations into consideration and generates an actual forecast. Now, the forecast in VantagePoint is up to 86% accurate. Let me show you what I mean. Let's get into the charts. We're looking at Chevron. Chevron's it's got some very good volume, and you can see that VantagePoint predicted Chevron down on May 1st. How do I know that? Well, let me explain. The blue line is a predicted moving average. That actually has predicted information in the calculation, and when it crosses below the black line, that's an indication that that trend is about to start moving down. That forecast is extremely accurate. In conjunction with that blue line crossing, you can see the green line at the bottom. The green line is a predicted neural index. Also taking those global relationships into consideration, it's generating a forecast that the average price over the next couple of days is going to be lower than the previous days. Now, I say lower because it's down here in the zero position. You see the zero on the left-hand side of the screen. If it was up in the one position, that would be saying some short-term strength. Now, when you've got an overall trend predicted to go down and you've got overall weakness expected in that market with the neural index, that forecast combined, again, is up to 86% accurate, and you'd be playing the short side of Chevron if you're using that kind of forecast to make your trading decisions. When you look at that, look at the profits on Chevron. It's $13.27 per share to the short side. Now, the profits are great. You're talking about making tons of money. If you had 10 contracts of something like that, you're up $13,000 or so. Now, the key here, though, is that the big drop due to the Greece news happened at the end of this forecast. Now, Monday's data was right here. That was the big drop on Monday. The great news for VantagePoint users that were trading this trend because of the forecast, they were in position, and that drop in the markets helped them dramatically. If you look at ConocoPhillips, same type of chart. Right? VantagePoint indicated the trend in ConocoPhillips was going to start going down back at the beginning of May, end of April. If you had that forecast, again, you're on the right side of the market. So when the news happens with Greece and the markets drop dramatically, you're making money, not losing money. There's another 10%, another $7.31 per share. Well, now we've looked at two energy stocks, right? Well, let's take a look at the energy ETF. I'm looking up at the Energy Bull 3x share. This is a triple leverage market. Imagine that. The entire sector was forecasted to go down at that same time as well. And that kind of position right there on a sector, on an ETF, especially a triple leveraged one, generates incredible profits, 25% profits. Now, this is key. You can see that the market was expected to go down, and it went down. But look where the market was expected to go. VantagePoint indicated that trend reversed back here, and you could have been long this ETF up until May. And doing that in two trades, you're up 50% profit in a triple leverage ETF on the energy market. So very quickly, you can see already, just in the charts we've looked at, how global market analysis can help you forecast trends. And when you're forecasting trends, you're getting on the right side of the market more often. Now, everything isn't going down. There's a lot of things going down. I mean, look at Micron Technologies. Micron Technologies has been going down now for several weeks. There's the big drop in the market that everybody was talking about from Sunday, or I should say Monday. A dramatic drop in the market generated some great profits for the people trading this stock. Let's see. 29% profit on the underlying asset, $7.78 a share. This was $25 or so when you shorted that. Again, an opportunity that you were on the right side of the market. Now, it's not just about being on the right side of the market. It's about catching the trend. I brought up Mosaic so that you can see VantagePoint indicated that this trend was going to go up back here. The blue line crossed above. Then VantagePoint indicated the trend was going to go down. The blue line crossed below. If we follow these trends, we're talking about picking up profits that you couldn't be missing, and you are missing because you're not forecasting with any degree of accuracy unless you're using the global market analysis. And when you use global market analysis, you're just able to look at that. Another $1.83. And then, like I said, not everything is going down. Mosaic has been going up even through the turmoil in Greece, and you'd be on the right side of that making profits. You're up already at 10% just in the last month in this one stock alone. Gilead Sciences, another opportunity that was going up the entire time until VantagePoint forecasted it down on Monday, Tuesday. And there's a lot of people trading healthcare out there. You trade this healthcare stock, you make profits, you trade it to the upside or the downside, doesn't matter. All right, let's go find another one. For you Forex traders out there, look at the British pound yen pair. This was forecasted to go up way back in April. Again, same type of interpretation. Blue line above black line, neural index in a 1. Everything's confirming that this trend is expected to go up. If you're able to capitalize on a position like that, just in one standard lot, you could have made $16,000. Now, a standard lot costs you less than $2,000 probably in this pair. This is a cross pair. You get 2 or 3 lots of that, and you can see how you're making a lot of money, a lot more than VantagePoint. VantagePoint is an initial investment anywhere from $4,900 to $6,900, and you can see how very quickly you recoup your investment, especially right now. With the holiday coming up, we have an incredible promotion going for 4th of July, so you should give us a call. Look at this, British pound, New Zealand dollar. Another trend with the pound that was going up, and it was going up substantially. The yen, the New Zealand dollar, look at this, $70,000 per contract, or should I say $70,000 per full-size lot. Again, that lot costs you about $2,000 or $3,000 with leverage in Forex, and with these kinds of forecasts, just look at the profits. All right, let's move into futures markets. Futures traders, the market movements and the reports and the jobs report, the FOMC reports, all that information really has an impact on futures traders. And if you could just add a tool that's taking global market relationships into consideration, you'd be a lot more successful. Here's soybeans. It was forecasted to go up on June 2nd. It went up, and it went up strong, especially this week. Even with the news in Greece, soybeans went up. You could have made $5,400 per contract. That's just one contract of soybeans, and a lot of people are trading a lot more than one contract. The grains have been great. Look at wheat. Wheat also, just in the last couple of weeks, wheat's been up. And in one trade of wheat alone, just in, 7 trading days, you'd be making $4,300 per contract. And most of you are trading 5-10 contracts of that. You're talking about, with 10 contracts, $40,000 in profits. Again, the markets are so global. You know this. I know this. We read about it every day. But when are you going to finally take those global market relationships and use them to your advantage? VantagePoint does intermarket analysis and uses those relationships. And matter of fact, it's finding 25 other markets that are influencing any market, any stock you look at in the software, such as wheat, and it's figuring out which ones are influencing it, which direction they push wheat, and to what degree. That's the kind of information that you need in today's markets that are so connected, so global, so you can make money consistently.